What's up, everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we had a very bullish finish to the week, and the bulls are very close to a bull breakout above the bear market resistance trendline. We just need the final confirmation in the price action. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so last week I made a video called Down First, Then Up, because I do think the bulls were trying to get a little bit of a cool down period before they try to blast through the bear market resistance trendline. So it's very important to understand this concept going into next week of trading, that we could be about to witness the bull breakout of this bear market resistance, which means in the short term we could be going into a bull trend. Now, to illustrate this, I want to start on the weekly chart of SPY, because on this weekly chart you can see that we do have a bullish pivot from this support level at SPY 380. You can see we saw selling pressure reducing on decreasing volume as we approach that support, and now we're seeing bullish volume increasing as we bounce off of that support and come into the bear market resistance trendline at SPY 400. Now, while I do think the bulls are going to break the bear market resistance trendline, we need to be objective and wait for the price action confirmation, which is going to be the daily close above SPY 400 and the run up towards the next weekly resistance around SPY 407. So what I'm trying to show you from this weekly chart is you immediately need to get a lot more bullish once SPY breaks above this resistance trendline, because we could see the bulls running all the way up to SPY 430 and possibly even higher. This is a very bullish weekly chart once we get the confirmation in the price action of that breakout above the bear market resistance. Now, if you want to stay bearish, you can do so as long as SPY is below 400. But if price action starts closing above 400, you instantly need to bail out on your short positions, because you are going to lose a lot of money if you hold on to them as the market is breaking out. And as you can tell from this chart, this market has gone absolutely nowhere, going all the way back to May of last year. So this is going to be a very impulsive breakout if we get it. You can just draw a horizontal line from price, and you can easily connect that to prices that go back to May of last year. So the market has been in a very long-term consolidation of going absolutely nowhere. So I do believe this breakout will have enough momentum to send SPY all the way up to 430 or higher. Now, we just need the confirmation in the price action, and that is going to be the confirmation of that break above 400. And I do not suggest getting bearish on this market unless we break down below this support at 380, and then you can throw all of the bullishness out the window, and we are continuing back into this bear market as we go down for that next leg lower. So stay bullish above SPY 380, and the confirmation of the breakout will be above 400. Jumping over to the daily chart of SPY, you can see that we had a very bullish Friday, going up 1.8% on high volume after a very strong bounce off of that support at SPY 390. That is why I continue to remind you to not be too bearish when we get to support levels, because we are in this consolidation trading range, which means we're very likely going to continue to bounce as we hit support. So you can see from the price, we did close the gap to the upside, and we closed just below a negatively sloping 200 daily moving average. So going into next week, we have two major resistance levels we need to break, and that is going to be the resistance between 397 all the way up to about SPY 400. And even though there is a good chance the bear is not actually going to be at 400, because the bulls are making another push so soon, he is very likely going to retreat back up towards 414. But for the time being, we will leave the bear at 400 until the price action confirms the breakout with the daily close above that resistance. Now, looking at this chart, you can see a lot of these moving averages are starting to be positive slopes, and price action is using them as support. So there is a lot of evidence of why you should remain bullish in the short term, using these risk levels down here at support right around SPY 389 down to about 387. If we lose support, you'll see it in the price action, and you'll know we're likely coming all the way back down to SPY 378 to 380. But for the time being, with a high volume bounce from 390 and another attempt at the bear market resistance so soon tells us the bears are getting weaker and the bulls are getting stronger. So I do give the bulls a lot of benefit of the doubt here that they are very likely going to get the bullish breakout next week. So as always, we'll let the price action do all the talking, but you need to be very objective, because if we do get that breakout, we are very likely going to see a very quick run up to SPY 414 and higher. So use that critical risk level at the resistance at SPY 400 if you're shorting this market, because you instantly need to get more bullish if we break above that resistance, and then use the critical support down here at SPY 390. On the NASDAQ 100 triple Qs, we were up 2.74% on Friday, and again we had a very high volume bounce from this support zone, and we're back over the 50 EMA, and we did fully close that gap, which was just below 278, and we broke above the resistance at 280 and had another daily closing higher high above 281, and we are very close to the bear market resistance trend line at 285. So in the triple Qs, we have the bear anywhere between 285 to 288, and then we will likely run all the way back up to that negatively sloping 200 moving average, which will be around 294. So as I said with SPY, the bulls have a lot of momentum going into next week with the very bullish finish to the week. And as you can tell from these moving averages, they are all positive slopes and price action is using them as support. So I'm giving the bulls a lot of benefit of the doubt going into next week to get the bull breakout. That means you instantly need to get a lot less bearish as the bulls are starting to run, because we could start running all the way back up to fill the gap on the triple Qs all the way up here at 308. And we are going to get that confirmation once we break through all of this bear market resistance. Use your downside support around 280 and this previous daily closing low at 275. And if we break that, we will still have support at the gap fill and the rising 20 daily moving average at 273. On the Dow Jones, we were up 0.92% on Friday, again on increasing volume, and we did fill the gap above, and we did get the daily price action close back over the 50 EMA, but we are still below the rising 20 daily moving average. So we are still looking for some critical resistance between 334 and 336. If we break that resistance, we're coming all the way back up to 343 and 346. And use the downside critical support at 330 and 327. On the Russell 2000 IWM ETF, we were up 1.65% on Friday on very high volume buying, and we did fully close the gap below 184. So from here, we are very likely running back up to 188, and then above 188, we're likely running to 195 to 197. Use the critical downside support at 182 and the gap fill below 181, and then below that, we have critical support at 178. So you don't want to be bearish unless we lose all of this support or get another rejection from this resistance above. On the ARKK ETF, we were up 4.92% on Friday, and we fully closed the gap around 36. So from here, we're likely running back up to 37 and then 38, with the bull breakout being above 38 to send us back up towards 40 and then 41. If we get rejected from resistance, we're coming back down to the support around 34.7. And if we lose support, we're coming back down to 33 or 32.5. And then below that support, we have a gap to fill around 31.68. But for the time being, this is looking bullish in the short term with the high volume bounce off support. On the VIX, we were down 3.26% as the VIX continues to get crushed back down below 20. So this is continuing to look bullish with the VIX below 20 because that means there's low fear, which is more in line with a bull trend. So if we continue higher and get that bull breakout above the bear market resistance, I expect to see the VIX trending back down towards 18. If the VIX spikes back over 20 to 21, then we're getting more volatile and we could continue back into a pullback. On Bitcoin, we're currently up 2.31% and Bitcoin is trading above 23,000. So we did get two bull breakouts above 21,300 and the bull breakout above 22,400. From here, we can see Bitcoin running back up towards 25,000. So there's just nothing bearish about Bitcoin in a strong bull trend. And this is a very risk on asset. So with Bitcoin going into such a strong bull trend, it is very likely that the stock market is lagging behind and about to follow suit. So I do expect to see the bull breakout in the indices, especially with Bitcoin looking this bullish. So on Bitcoin, look for the next major resistance up here right around 24,460 and stay bullish as long as we're above this breakout level at 21,300. On Amazon stock, we were up 3.81% on Friday with that strong bounce off of the 50 EMA of support at 93.6, and we're back over the resistance at 96, which means we could run back up to 98, then 102, and then above 102, we're likely running to fill the gap at 110. Stay bullish while we're above 93, and if we break 93, then you're looking for the gap fill of support at 90. On Microsoft stock, we were up 3.57% on Friday, and we did get the bullish bounce off of this support right around 232, and we're back over the 50 EMA, but still below the critical resistance at 242. You need to break above 242 to get bullish, and then we could start running back up to 252. And if we get rejected from 242, look for support at 232 and the gap fill at 225. On Nvidia stock, we were up 6.41% on Friday, and we did fill the gap above at 173, and we did break out to a new daily higher high, and we're right back up towards the resistance at 179. Above 179, we're looking for the next price target at 192, and if we reject from 179, we're coming back down towards 167 and then 156. On Tesla stock, we were up 4.91% on Friday as Tesla continues to find high volume buying at this very critical support zone down here. So I do continue to believe that Tesla is about to go higher, and I do believe it's going to be very quickly. There's a lot of short sellers in this stock, and I do consider Tesla in short squeeze territory as long as it's trading above 123, which it currently still is. Price action is now above a rising 5 EMA and 13 EMA, and the 20 simple moving average is flattening out and getting ready to turn the corner to support the buyers. So I think we will see Tesla trading above 138 this week and likely trying to run back up towards 155. So continue to stay bullish in Tesla as long as it's above 123. If we break below 123, then we're very likely coming down here to fill this gap at 114. But that is only if price action can break down through this support zone. On Apple stock, we were up 1.92% on Friday, and Apple is starting to get the bear market resistance trendline breakout above this resistance at 138. We are very close to seeing the confirmation, and then above that, we'll be looking for Apple to run towards 146 with resistance on the way there around 141. Stay bullish in Apple as long as it's above 135, which was the bull breakout, and below 135, you're looking for strong support between 130 and 131. On the financials, we were up 1.58% on Friday as we bounced off support, and we did fill the gap to the upside. And as you can tell from the moving averages, we are in a bull trend, so the financials are looking very bullish at this time. On the industrials, we were up 1.39% as we bounced off support right around 97, and we're likely coming back up to fill this gap, which is just below 100. On the healthcare sector, we were up 0.5% on Friday as we're bouncing from that oversold condition below the lower Bollinger Band, and the next bull breakout will be above 134 and 135, and then we could see the healthcare sector starting to run. But for the time being, there is the possibility we're going down towards 131 if we get rejected from 134. On the energy sector, we were up 1% on Friday with the bull trend and the price action above all of the moving averages, so we're looking for energy to run back up towards 92 and then 94. So jumping back over to the S&P 500, as you can tell from the analysis and the entire view of the market, a lot of stocks and sectors are in bull trends and getting ready for major bull breakouts, so I do expect to see the bull breakout coming this week in the indices. As always, let the price action do all the talking, because the stock market could not care less what I think, but I do think there's a very good chance the bulls are ready to push, and after cooling down with the pullback, we are very likely going to see the bulls having enough energy to push through the bear market resistance trend line once and for all. That is instantly going to trigger a short squeeze and a very impulsive rally that could take us to much higher prices. So be aware of that, and then just let the price action guide you from there. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.